Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. Today's video is going to be a bit interesting because it actually is going to continue where we left off. The little experiment I've been doing with my aggressive grid trading technique is now up to 4,300 trades. Now the goal of this is to actually take each asset up to 10,000 trades. And the purpose of that is very simple. While it's making money, everything looks nice. It's actually made $157 of simulated profit for the time I've been running it. But the dark side to this is that it hasn't taken a stop loss yet, because my grid is not saturated. For example, we can see here that I'm at 112 positions on Euro USD. My grid has 123 levels. So the true value of this technique isn't going to be seen until my grid is saturated. That is, until I have 123 levels deep. Now, being that this market is moving only roughly an average of 2 pips at 123 levels, you're looking at roughly 200 to 250 pip movement in the market. That's not very much when Euro USD could easily see 1,000 pip swing in one single 24-hour period. So having such an aggressive market movement with an aggressive market trading technique could wipe out all of my profits very quickly. And that's going to be what determines the true representative value of this trading technique. Now, my defensive grid can easily handle a 1,500 market movement, 1,500 pip market movement shift, because it's in it for the long haul, looking at 20 pips per trade with a huge level of volatility added to it to space the trades out. But defensively speaking, that's meant to wear and handle the market with an extreme situation, with 21 years of data backing up those numbers. The aggressive technique is only going to handle 250 pips of movement at most, unless you have a very high level number of grid lines that you're tracing. But I don't. I have 123 levels. So when my first stop loss takes place, and it is going to take place because the market is going to move, realistically, that's going to happen 15% of the time. Guaranteed, 15% of the time, the market always goes against your position. This is a short trade. That means 15% of the time, the market is going to move in a long direction hard. 70% of the time, the market is going to be in a sideways state. 15% of the time, the market is going to move in a short state, the direction I want. Realistically, when that market does go against me and I start taking losses, that is when the true value of this technique comes in place. Those losses are going to hurt. No way around it. Will the reduction technique make the process easier? How many trades have I burned off on the bottom of my grid throughout all of my profits? That's where things really start to begin to come together, not just as a trading technique, but as a risk mitigation technique, balance management technique, and most importantly, portfolio analysis. Overall, this could go wonderful, or it could turn out to be a complete and total disaster. Meaning, if I take 10 to 15 stop losses back to back, What's that going to do to my budget? What's that going to do to the profits I've already earned? How long is the market going to move in this aggressive state against me versus how long will it take in the long run for me to reaccumulate and get back those profits that I've lost from the stop losses? All of those questions have to be answered. Real questions for a real situation you need to find out before you put your real money into it. And that is exactly what this process will soon be doing. I'm really only about 10 to 11 levels away from that first stop loss. And this morning's market has been totally insane. So I expect within the next 24 hours, I am going to hit my first stop loss. And then from there, we'll see what happens. Now, as you can see, it is moving back and forth aggressively, and it is really doing well for now. But this experiment has more to it than you would imagine. You see, the main part of my experiment is a budget of $10,000, and I am using 50% of that per each currency pair, which is in the account French vanilla. So that means, roughly speaking, $5,000 is going to Euro USD, $5,000 is going to USD Canadian. But in that, I'm only allowing 43% of my budget to be used. So I'm only allowing no more than roughly $4,300 of my total budget per a single asset, because I know those stop losses are coming. That's why I am not using the full amount of my budget. My NAV is going to be affected by those stop losses. The amount of margin I am allowed to use in the account is going to be affected by those stop losses. Everything comes together on that first stop loss. And then after that, the consecutive stop losses just continue to add, to the point that if you don't think about this circumstance before you begin trading, you could get a margin call because you don't have enough reserve to handle 10 or 15 simultaneous stop losses. The whole point of this process is to deliberately take those stop losses when they come, so that the floating grid technique is able to move with the market in an organic way. You can't avoid not taking losses. You have to accept that as part of the technique. And it doesn't matter if it's aggressive or defensive. Those stop losses are going to absolutely burn. Real reality is about to come into a crashing, standing wall. When you're trading at any level of aggression, that aggression is going to be magnified exponentially based upon just how strong it is. So, as we see this unfold, we will get the true merit and meaning of the process, which is why 10,000 trades as my goal is so critical. Now that's 10,000 trades per asset. Right now I am at 4,300 trades per both Euro USD and USD Canadian in the French vanilla account. So I've got a long ways to go to really see just how real this process is in the long term, with a realistic point of view in terms of actual profitability and sustainability. Being profitable doesn't matter, because right now I have 114 open trades, and it's costing me money on a daily basis for finance rates. So that is the problem. I just can't turn it off and walk away. That is the worst thing I can do right now, because I am committed. As soon as you start spending and you get into your saturation levels, and really that's 10 or 20 trades into the process, you just can't turn it off and walk away without a loss. At this point, with 114 trades, my loss is going to be significant. So it's not something to take lightly. You must take the time to test. You must take the time to really aggressively run your demo account and watch it with a realistic expectation of what should happen. If I just ran this for 100 trades and called it a day, I would never know what's going to happen when a stop loss hit. And that first stop loss of real money is going to be an absolute total earthquake. Prepare, plan, test, analyze. You're not going to get this kind of crap out of most YouTube channels. And it is crap in the contents that they want you to think that this technique is going to work magically. It's not. The reality is you are risking or will be risking real money. Don't follow the garbage on YouTube channels that don't show you what stop losses do. When you see a trading technique, test it yourself in a demo account. Real techniques will work consistently. Look for the things they left out. Finance fees, commissions, stop losses. There is no such thing as a 100% win rate, ever. And any channel that tells you they have it is lying to you. You cannot have a 100% win rate in a market that simply doesn't allow it. Which brings us to the next point I want to make about this and a second experiment that I started, which is where Blueberry Cobbler account comes in. It's easy to take a $10,000 account and then do something like this. But in the real world, and the legitimate marketing hype doesn't target people with large amounts of money. Many people say, take $20 and you can turn it into $52,000. Or take $1,000 and turn it into $10,000. That isn't reality. And that's where my second experiment is all about. I have an account that has $800 in it. This is a demo account. Again, do not use real money. Test first. And I'm using this technique on an $800 account. And as you can expect, the position sizes aren't that great. That is what this is about. This is literally starting an $800 account, aggressive trading, and I've already gone through the margin proofs, tested everything out, and technically speaking, this account is over leveraged. I've asked for a level of 123, but my budget can only sustain a level of 109. So this will most likely end badly. If I had an account of $1,000, then it wouldn't end so badly because then my budget would be covered. But that's not what I'm doing here. I'm showing worst case scenario as something you would see. People saying, go ahead, do it. By the time you get to the higher levels, you've made the money. Is that going to be true? Will this technique actually make $200 by the time I get to 109 levels within my grid? What happens when this thing takes its first stop loss? Such an aggressive technique is brutal. And that is really something you need to deal with. And something that needs to be a deliberate consideration. Now this technique works perfect defensively. And this budget is quite nice defensively. In fact, I actually use it with real money. And I make 5 cents per trade and on an average of 10 trades a day. So roughly 50 cents a day. It's more than enough for me to make a generous profit over time, and it covers my finance fees. It's not going to buy me anything very quickly, but it's a nice, simple, passive, convenient way that I earn a little bit of money here and there through the process without worrying about it. And yes, the stop losses still hurt like hell when they hit. And they are going to hurt when they hit because they're going to do their job. Move the whole grid when the market moves. But nonetheless, this market is what we're going to be looking at. And as you can see, I am literally starting with just one unit. Not a lot of money is going to be made here. In fact, you can see I'm not even making 1 penny per trade. And reductions are very minute. And that's the other thing that you have to look at when you're dealing with small budgets. Are the reductions actually going to be more devastating than beneficial in the long term? You're going to have to really watch this carefully. This is not a turn it on, walk away, and just go think you're going to live your life on the beach. You're not. This is watch it every day, make decisions about it, be ready to deal with the consequences, and most importantly, understand what's going to happen when things really go wrong. Like a stop loss, a hard market movement. If you don't have the budget to sustain the levels of the grid, there are countless things that are going to go on with this. But the thing of it is, the irony that this has done in the last 12 hours, the last 24 hours, but 12 active for the market, it has actually made 12 cents of change. For example, here is my balance of this account, and you can see each time it goes and collects. So as we continue to move through this, the thing about this account is what happens when it reaches saturation. When this account becomes saturated with 109 levels, which is what this budget can handle, what's going to happen? What's going to happen to my NAV? What's going to happen if it tries to purchase the 110th level and I actually don't have the NAV? Is it going to trigger the emergency response that the program is built with to start burning off the lowest levels? All of those questions need to be answered, because not every trading technique will work with a given market, and you have to be aware of that. So here we are. You can see the final balance is $800.13. And you can see my unit sizes are ridiculously small. The amount of profit I am making is unbelievably low. But it's working for now. It is actually working at a microscopic level, and it's actually got the potential to benefit well, even if it's not going to be bringing in hundreds of dollars a day. So we're going to follow this experiment and see just how far it can go, or if it's going to blow the account up. Remember, most important aspects to be considered in using a hyper-aggressive floating grid is make sure you test it carefully. Don't stop at 100 trades, 200 trades, or even 500 trades. Run it for at least 10,000 trades. Make sure you see what happens when your grid hits saturation. Even after 10,000 trades, if you just happen to have a market that's just been wonderful for you, don't stop running it. until you hit saturation. That is the most critical point of any grid trading technique. Anything prior to saturation is just eye candy. It doesn't give you the truth. When you hit saturation and you start taking those stop losses, that's when the grid really begins to show you the real truth of its strategy. So hopefully this will help you with planning out your own grid and understanding the risks necessary based upon the budget you're willing to put into it. Remember what I said in the last video. The number of levels is absolutely critical. If you don't have enough, you're going to take too many losses. If you have too many, you're going to pay too much finance. Finding that balance is hard. It is incredibly difficult to determine where the sweet spot is for a given market. Trial and error through a demo account are the only way you will learn what is necessary to ensure that you have a realistic and reasonable approach. In wrapping this video up, we can see that so far in the last 24 hours, I've taken 199 trades and it's made 13 cents of profit. That's not bad considering where it's sitting right now. What will it do a month from now? What will it do 1,000 trades from now? We're going to find out. So if you've enjoyed this video, please hit the like button. Subscribe if you're not. Share this video with somebody if you think they would be interested in this kind of a technique or need to learn more about risk management. Leave me a comment. Let me know what you think about this kind of technique. And remember that this program is available through the Jackrabbit Relay Supplemental Repository. So if you want to actually run this test yourself, you can, and see what it does on your side. Verify these kinds of results. Don't take any word for whether or not a strategy is profitable. Test it yourself. Find out if it's profitable. Find out more specifically if it's profitable for your personal situation before you ever use it. Thank you for watching, and until next time.